Scalping on the 5-minute timeframe is a dynamic approach to trading where precision, timing, and discipline define success. Unlike swing trading, which waits for larger moves, scalping targets micro-trends created by volatility spikes. This method is especially effective during high liquidity periods like the London or New York sessions, where market makers and institutions execute large orders, causing sharp and quick movements. Scalpers don't need big trends, they capitalize on bursts. By the end of this video, you'll know exactly how to enter and exit with accuracy, avoid fake outs, and manage risk like a pro, using the power of technical tools and price action in a structured system. Supply and demand are the backbone of price movement. When large financial institutions enter the market, they leave behind footprints. These are areas where price reacts aggressively. On this chart, the price rallies from a specific zone. That's your demand. When price revisits it, watch for reaction candles, like dojis, inverted hammers, or engulfing patterns. Combine this with volume confirmation. If volume spikes at the zone, it shows real buying interest. Enter only after the candle closes inside the zone and begins to reverse. These institutional footprints often result in high probability reversals, especially when marked correctly and validated with strong price action. The exponential moving average crossover is a tried and true momentum indicator. The 9 EMA responds faster to price than the 21 EMA. When the 9 crosses above, it suggests bullish momentum. But the crossover alone isn't enough. You need context. Is it happening near a demand zone? Are the candles strong-bodied with little wick rejection? Is volume confirming strength? If these align, you've got a powerful setup. Place your stop loss just below the recent low and target previous structure highs or Fibonacci levels. This way, the entry is not only technically valid, but supported by market behavior. Signal boxes provide a visual representation of market intent. They're typically created using algorithmic conditions like candle formation, volume spike, and trend alignment. A green box forming after a series of red candles suggests a potential reversal zone with buy interest. These aren't random. They're based on cumulative price action behavior. Traders can use them for early entry signals or to re-enter trades after pullbacks. Wait for a candle to close fully inside or break out of the box to confirm direction. When combined with EMA and zone analysis, signal boxes offer laser-sharp precision. Supertrend combines ATR and trend-following logic to give you a dynamic guide. When price closes above supertrend with increasing volume, it's a double confirmation of trend continuation. Many traders combine it with Heikin Ashi candles to smooth out entries and reduce noise. In a scalping context, the supertrend helps you avoid counter-trend setups. If the trend is up and you're getting buy signals from your zone and volume, supertrend confirms you're aligned with the larger directional flow. Exit strategies can also be based on supertrend reversal signals, giving you a full entry-to-exit system. Liquidity sweeps are engineered market moves designed to trap retail traders. Institutions need liquidity to fill massive orders, and they get it by triggering stop losses. The image shows price dipping below a previous low, triggering retail SLs, and then reversing with force. This is not a coincidence, it's manipulation. Scalpers who understand this can exploit these moments. Wait for the sweep, then look for a high-volume bullish candle closing above the sweep level. That's your green light. Set a tight stop loss below the wick and aim for the nearest resistance or ATR band. These trades work because most of the weak hands have already exited. Bollinger Bands are volatility indicators that contract during consolidation and expand during breakouts. A squeeze is when the bands come close together, indicating a potential explosion in price. When this squeeze happens near a demand zone and price breaks above the upper band with high volume, it's a textbook breakout. You don't chase the breakout, wait for a candle to close beyond the band. Enter on the next candle, stop loss below the squeeze range, and target twice the width of the band for a high probability move. This setup works best when combined with opening session volatility. In scalping, survival depends on protecting capital. A proper risk-reward ratio ensures you don't need to win every trade to be profitable. The chart shows predefined risk zones in red and reward zones in green. Your entry comes after all confirmations, zones, indicators, candles. Place your stop just below the most recent low or rejection candle. Target key resistance or a Fibonacci extension. For every $1 risked, aim to make $2 or $3. Even with a 50% win rate, your account will grow steadily with the right RR model. Risk management isn't just protection, it's your ticket to consistency. ATR, or average true range, tells you how much an asset moves on average over a period. It helps adjust stop loss and take profit levels dynamically based on volatility. In the image, price stays within colored ATR zones, bouncing from one to the other. Scalpers use ATR bands as smart targets. Enter near the lower band with bullish confirmation, exit at the upper band. This keeps your trading realistic and adaptable to changing market conditions. When ATR expands, widen your stop loss and TP zones accordingly. This adaptive method ensures you're not overexposing your trade during high volatility. This technique uses price behavior around EMAs for scalping confirmation. When a bearish candle fails to touch the EMA and is immediately followed by a bullish candle that breaks the previous high, it shows strong buying interest rejecting lower prices. This is especially powerful during early session opens. Enter above the bullish candle's high, set your stop just below its low. This method reduces risk significantly while catching early trend continuation moves. Use this when other confirmations like volume, trend, and demand zones are also aligned for maximum accuracy. Bringing it all together, start with strong zones based on institutional footprints. Let price come to you, never chase. Confirm with a fast EMA crossover near that zone. Validate the move with signal boxes, super trend, and volume alignment. Look for candle patterns that reject liquidity sweeps or signal breakout from a Bollinger squeeze. Use ATR to size your stops and targets, ensuring a solid RR every time. Follow this blueprint with discipline and patience, and you'll stack up consistent wins without emotional trading. This strategy is mechanical, repeatable, and built for reliability. If you've learned something valuable today, don't leave without taking action. Like this video so others find it too. Subscribe to Financial Freedom FX for professional level strategies, simplified for traders of all levels. Comment below with your questions or share your results. Whether you're new or advanced, our goal is to help you trade smarter, not harder. This 5-minute strategy isn't just theory. It's your gateway to faster, more confident trades. Stay focused, stay profitable, and keep chasing financial freedom.